A couple times a year, I attend a few meetings that's really kind of centered on family offices. So there's family offices from around the world that attend, as well as a lot of just like wealth management firms.
Any
RIAs.
institutions?
Yeah, some relatively decent sized institutions,
Okay.
Some pension funds, some insurance companies, but mostly family offices and RIAs,
Okay.
registered investment advisors. And so, I love going to conferences where everyone else is doing really big things.
Yeah.
And, the really smart people, they're managing a lot of money, smarter than me. They're seeing more deals. It's just getting so much information. And again, it's like kind of where is the smart money thinking about making plays? So it was really fascinating. And honestly, a lot of what we are covering on the reports today is also on the top of mind of family offices. No surprise, though. I mean, there's a huge interest in real assets, real estate, and commodities, with multifamily being probably the most popular, real estate asset class of interest. And if everyone is relatively, still bullish on the sector, but there's just so much uncertainty. Yeah. So obviously, the topics weren't too different from what you may kind of hear on kind of the mainstream, talking about inflation, talking about interest rates. Potential recession. Most people aren't thinking that there's going to be a recession, immediately. It's possible, but most people are, kind of downplaying that fact. Yeah. But really, real estate and commodities, and what you do in this kind of new environment that we're in.
That's what I was wondering. And we talked about this like about a month or two ago, even when we're talking about an impending recession, and you're talking about people that may be more nervous about investing in multifamily. But what's the alternative? Yeah. Commodities. At least if they've got these kind of ideas in mind, then that's one thing. But to me, it's like a recession is a situation in which the investment for across the board could be difficult.
And and the problem with commodities, like a lot of people were talking about, is they can be great in for a short duration when there are these run ups, and there's talk of this commodity super cycle. But looking at commodities over a 10-year hold period, historically don't necessarily perform that great. Over like a short period when things are running up, if you look at copper, look at a lot of other
lumber was
up, and now
it's down. I remember if it could only just get back to $600. Now it is. And I think it's below,
from like 200 per whatever random length board to 1,200, and now it's so it's still up, but it's not insane.
But other commodities haven't gone down at all. Yeah, and it's crazy just to think where that labor is and where that takes a real PhD.
And so so for on the long term, they're okay. Well, maybe commodities aren't the best. Maybe short term right now, but again, it's like real estate that trades out leases at a relative high frequency. So not necessarily net leases, but multifamily and hospitality. Still a little bit of softness on the hospitality front, although some people are kind of getting into it. But a lot of interest in multifamily. Less interest in tech, a little bit less interest in like venture capital. There is much interest in kind of multifamily and real estate as there has been.
So was this conference that you went to? There were all kinds of investment assets.
Yeah, all kinds of stuff. There was a lot of real estate, but kind of pick your asset class, everything from blockchain and crypto to cannabis to
and
VC.
The atmosphere was still people murmuring about real estate, not necessarily talking about blockchain.
Yeah, much less talk about blockchain than at previous meetings. The last meeting I was at, it was a ton of blockchain discussion. Yeah, people are still interested in it, but have definitely softened to it. And I think they're deciding, hey, let's kind of get back to the basics here and what we know is going to work, and less kind of appetite for risk. And we want something that's stable. We know it's going to work kind of over the long run. And the fundamentals, the thing they just kept getting echoed is like the fundamentals for multifamily are really strong.
Well,
it's just interest rates.
And one thing that I didn't talk about, that I didn't put on this video, but I did put it in the newsletter, was negative leverage. Yep. And negative leverage is increasing in CRE space. But as you said last week, this investment into like crypto, that kind of stuff, it's in that same genre as negative leverage, in that you don't have a fundamentals that are kind of driving the income, and you're just waiting for the end of your investment cycle.
Yeah, waiting for someone else to pay more for it. Yeah. At the end of the day. Yeah. And there was 2021, people had so much extra money, they're like, I've got to put it somewhere. And so sure, I'll take a risk on some more growth, real risk assets like crypto or speculative tech, and there's just so much less appetite for that. And we're seeing that kind of those markets correct and all those asset classes that are, I would say, more like discretionary, like you wouldn't normally invest in this, but if you only would if you just had extra money you had to put somewhere. And so, we're seeing it, in, random, sectors as well. Like, something that I read recently is like the luxury watch market, like, was going crazy, like other things, and like, whatever you want to pay for a Rolex, the prices were totally insane. Yeah. But like there's been a total correction in like the luxury watch market because people don't have an extra like $10,000 or $20,000 like they were on paper. There was a wealth effect. Everyone saw their stock market portfolio is way up. Now it's not.
Well, and even in the multifamily arena, like let's say you do get negative leverage. If you have that patience and you have that faith and you really think that you're going to get the growth at the end, then maybe it's worth it. Yeah. But I think if you're kind of assessing the general sentiment of everyone, I don't think it doesn't seem to be that smart to be jumping in.
There's still the idea because rent growth is so high, which we're going to get into. There's still kind of the sentiment that like cap rates don't matter. You're kind of going in cap rate means much less to what your returns are. Will be based on your business plan, assuming your business plan is somewhat conservative and kind of in line with reality. And you're not speculating too much because we are, as we're going to see, really strong rent growth, or we're already seeing it.